Welcome back to this Moneycontrol live stream. I am Nandita Khemka, and you're watching, this live on what to expect from the RBI policy this time around. Of course, it's the first policy of FY26. Tomorrow, 10 a.m. The MPC meet outcome, will be, of course, taken through by the RBI Governor Sanjay Malhotra. Expectations are that there will be a 25 basis point rate cut, but a lot has changed globally that could pose fresh challenges for the RBI Governor. Trump's tariff announcements, harsher than expected, concerns over a global economic slowdown, and the spillover impact on India. These are some of the challenges that the RBI Governor will face. So, what should one really expect this time around in terms of the measures, commentary, and the future trajectory as well? To put that into perspective, we have with us Lata Venkatesh of CNBC TV 18 as always. Lata, lovely to have you here on Moneycontrol once again. A lot has changed globally, a lot of uncertainty when it comes to global growth, how global inflation will pan out. Of course, expectations are that we will see a 25 basis point rate cut. And 25 basis point seems like a given now. But, what are the chances that we can see a 50 basis point rate cut? Do you think the global situation warrants a 50 basis point rate cut right now?
Well, as you said, 25 basis was expected because even when we went into the February policy, the expectation was this is the first of at least three rate cuts. Now, at that time, tariff was a fear. Trump was sworn in. He said there would be tariffs. He said we will know on April 2nd what the tariffs will be. But now we know they are much more massive than what we had expected. So last 1 week, several brokerages have cut growth forecasts. And you don't need brokerages to tell us.
Yeah.
You are going to export less to the US. All other countries are going to export less. Many other companies are going to be poorer. So our exports to every other country will also come under pressure. Investment is uncertain. So that there is going to be a global slowdown in growth is common sense. And therefore now you will not dispute that 25 is totally discounted. There is an outside chance for 50 bips. Most brokerages are not ruling it out. They are giving it a 20%, 10% chance.
As I mentioned, that it may warrant a 50 basis point rate cut, but does it warrant a very extra dovish tone from the RBI governor? In that sense, could the stance change from neutral to accommodative?
Exactly. I didn't want to snatch that question because instead of showing 50 bips, he may show that extra dovishness which is merited by changing the stance. I think the CNBC TV 18 poll by a narrow margin says no stance change. But as we approach closer, I think the majority will move towards change of stance to accommodative. And why not? I mean, if growth is slower than expected, why do you have to wait till June for the next rate cut? Yeah. You can give it before, or at least say I am going to give it by changing the stance to accommodative. I think it's legit. I don't think that he will only do a 25 and not change stance. That would definitely be seen negative by the market.
Sure. What about the number of rate cuts? You must have spoken to a lot of economists, brokerages. They say earlier, I think it was somewhere around 50 to 75 basis points. Do you think now they can go to the extent of 100 basis point? Perhaps the rates, falling below the neutral rates of 5.5%. Could that be a possibility for FY26?
Now a given that it is going to be through the cycle 100 basis. 25 is given. 25 in April, and then June, and then August. So by August, that we will be at 5.5 is the universal expectation. I don't think there's anyone standing out, maybe a one-odd economist who thinks that let us wait, let us not spend all the arrows in our quiver. Even as you say, in August, although the repo rate will be 5.5, what is the repo rate? It is the rate at which money changes hands between banks for 1 day money. 1 day when they are borrowing, the call rate has to be kept at the repo rate. The call rate even today is trading below 6 quarter. What is today's repo rate? Today's repo rate is 6 quarter. But call rate is trading lower. Why? Because there is excess liquidity supply given. We know that the RBI has supply liquidity through various ways, swaps and purchases of bonds, OMO purchases of bonds, and therefore already it is slipping below repo. By the time we come to August, many people's expectation is that it will go even below that 5.5 towards the 5-quarter mark, which means an added cut, which means the one-day money is trading below the so-called neutral rate, which everyone thinks is 5.5.
Let's talk about growth now. We'll talk about the Fed also. I mean, that I think I'll take it as the last question. In terms of growth, our exports to US amount to somewhere around 2 to 3% of GDP, if I'm not mistaken. So in that sense, the impact is going to be lesser compared to other nations. But there will be a spillover impact, right? That's what the general consensus is. 20 to 30 basis points perhaps on GDP, right? So in that sense, of course, last time around we saw the RBI upping the growth forecast to 6.7%. The big question, will they cut it this time around, and if yes, by how much? Say 6.5%, or will they bring it below 6.5%?
Actually, the average that I'm getting on the street in terms of the impact of the tariffs on India is 40 to 50 basis points. Okay. It's not 20 to 30. And see, the total Indian exports to the US is 2% of India's GDP. But if you look at trade weighted, then it actually falls a little less. Okay. I mean, it would come to maybe 1.2% of India's GDP. So our exposure directly is not the a cause for concern. The point is, everybody who is exporting to the US is either going to export less or export at a loss to themselves, at a lower margin. No one exports at a loss, but if they were making a margin of 10%, the margin will have to be crunched to 8 or 7 or 6. Across the chain, somebody is going to take the hit of the higher tariffs. And there are many uncertainties, how do the US is not worried about your tariff. Your tariff may be 100, 200. You must have a lower deficit with me, right? The US at the moment has a huge trade deficit with Vietnam, China, even with India, $47 billion with India. They want it reduced to maybe 10 billion. They want it reduced for sure. We want to buy oil from them. Now, Chetana here, the Morgan Stanley economist, was saying they did a study. Everybody is saying, okay, we will buy more oil from you, even if it is a little more expensive. They don't have that much oil. They will take 12 to 18 months to supply that oil. Okay. So, we are now in a slightly, confusing territory. The US wants to supply, wants others to buy more and wants themselves to buy less from you. But they don't have that much of surplus of everything. So, we can't make these dramatic statements that everybody will export less. The US consumer has to consume, no?
That's true.
So we have to see how this thing will progress. The expectation is that they will give more time or reduce some kind of buffer. Otherwise, even the US economy suffers. All that said, there is clearly uncertainty on investment. Nobody is going to put in additional capex in Asia for sure. Because, Nike is wondering whether their shoes from Vietnam will be charged the earth when it lands in the US. So everyone is worried. So should they come to India? What if India is the next target? For whatever reasons, there is so much of uncertainty that total capex will come down. And therefore, we must expect that growth will have to be brought down. I don't think the RBI will, with a straight face, say 6.7. 6.7 was an overestimation even in February, because the budget or the economic survey was saying we put it at 6.3 to 6.9. Why were they giving that big thing? Because Trump had been sworn in, and therefore you knew tariffs were coming. The economic survey gave such a large margin. The Reserve Bank had put its forecast at the upper end of the bracket. Now it may be towards the lower end. I think they should say 6.3, but they may again give themselves a margin because of all the uncertainties I said, that the United States may have to give more time to all countries because they themselves are not prepared with that level of supplies to other countries if other countries are ready to buy from them. So maybe they will say 6.3 to 6.5, but they will have to cut the growth forecast.
Sure. Since you're talking about the US and the US economy and how consumers will have to shell out more there, as a result of this tariff war. We had the Fed chairperson talk about how they are willing to wait it out and stand pat on rates. But do you think they can afford to do that, or do you think sooner or later they have to change that stance and keep on cutting rates? Because I think the bond markets there after this whole tariff situation is or are factoring in 4 to 5 rate cuts. That was I was talking to Ajay Bagga the other day, the market expert. He said the bond markets are being fairly exuberant and they are hoping for 5 rate cuts from the Fed governor. But they have hinted at 2. They stood at 2 itself last time they spoke.
I don't think anyone is today an expert on that. Clearly, the experts you mentioned, Chetan Ahya, also said that they were expecting rate cuts later. But no one wants to put their neck out because yesterday the US yields went to 3.93. But today they have closed at 4.15. So, they are also trying to guess whether we have to first respond to inflation and then there will be deflation because consumers will not have enough money. Because of uncertainty, there will be less investments even in the US. So the market is all over the place as far as the bond markets are concerned. I would therefore not try to outguess the Fed because I think the Fed itself is not made up its mind. The Fed will also move according to incoming data. Incoming data on the lagged data is very strong. We didn't see it in the non-farm payrolls. That number was very strong for the month of March. Likewise, we didn't see any weakness in the inflation data either. So at the moment, the Fed also is guessing how things will pan out for April. April clearly will see, an impact of all these things.
Sure. Let's talk about the domestic inflation scenario as well. It's well within the RBI comfort zone, sub 4%. And of course, a lot of dovishness is needed as we have spoken about it. So, inflation forecast, could that be lower to 4%?
I would expect they should because now it's 3.6, that's the lag data. Up until perhaps September, there will be many months of sub 4 inflation reading simply because of the base effect and because now at least the Rabi harvest is in. The incoming monsoon forecast will impact crops after in the last quarter only. Up until September we know that we have enough supplies. So I think the Reserve Bank will be well within its rights to lower the forecast because the current quarter also is below the RBI's forecast and the incoming quarter will be impacted by a disinflation because of the tariffs. Now, if you can't export to the US, you will push the excess capacity in other countries. And it is very much expected that China would have excess capacity. They are the people who are facing the highest tariffs in terms of exports to the US. So that will try to find those goods will try to find a home in other countries, and a disinflation in Asia is a given. In fact, people are calling it deflation. There will be such a big cut in prices. So I think the governor will have enough, or the RBI will have enough in its model to guide the inflation forecast lower.
Okay, so lots to watch out for this policy. It's not a plain vanilla policy that we have been used to for a number of times, right? But last question really, in terms of liquidity, the RBI has been proactive. A lot of measures, 7 lakh crores as you mentioned, for liquidity pumped in. On that front, what do you expect? Any more measures? And secondly, from the governor's press conference, would there be something in particular that you would want to ask him?
Well, on liquidity, I don't think they will announce anything because they have made it very clear that liquidity is an ongoing thing, and in the policy they are only going to discuss rates and stance. So my sense is that we won't have there is not even a need. Already we are the call rate, as I told you, is trading a little below the repo rate because there is excess liquidity. Banks now don't need to borrow from one another at a high rate. They have enough liquidity. The announcements in the press conference itself will be, exactly this. Will you continue to keep liquidity surplus, and therefore will you be okay? I mean, what is your idea of the neutral rate? Do you see a need to go below the neutral rate? That is 5.5. Do you think even 5 quarter is needed, or at least to push the one-day money below the 5.5 rate? Those kinds of questions will come. I don't think the governor is going to give a very straight answer because if the Fed is floundering, you must expect RBI also to be prepared for all kinds of data. There can be sudden supply shocks which may make inflation look ugly. One odd month or one odd product can go up. There is still the monsoon forecast which is not in. So they may not want to put all their cards on the table. They may want to wait and watch. They want to support growth. Of that there is no doubt.
Yeah.
But I don't think will be very forthcoming in terms of the neutral rate. We will ask, but I don't think they're going to say that. And of course, there will be questions on
tariff turmoil and how things
on the banking turmoil. Yeah. On CEOs and
of course,
they have already lowered the risk weights on NBFC. Whether they will lower the risk weights on unsecured loans. Are they okay with MSME loans? I mean, MSME loans have done very well, but would you worry about any bad loans over there? So many of them are. See, exports is a very big labor-intensive and MSME-oriented sector. If that is hit, bank loans can also be hit. So those questions will also come up at the press conference.
All right, so lots to watch out for. A very, very important policy. The first one of FY26, 25 basis point rate cut given. Stance could change from neutral to accommodative. There could be a downward revision in growth forecast. There could be a downward revision in inflation forecast as well.
And there is a monetary policy report that is released every April and September, which is a general review of the economy that was and is. It is like the RBI's economic survey.
Okay.
So that will also be released, and that will give a forecast beyond even FY26.
Okay.
They normally give a little bit for the next year as well. And that will give the RBI's idea of the global reset.
Sure.
That will be looked forward.
Okay, lots to watch out for. Of course, we are counting down to the RBI's, RBI Governor's address at 10 a.m. tomorrow. Of course, we'll be getting your battery of experts to decode all the announcements that will be made. So don't forget to tune in 10 a.m. after opening bell on Moneycontrol and catch the, comprehensive coverage that we will be getting you on the RBI policy as well. Lata, thanks a lot for joining in and putting everything in perspective, always simplifying things for us, and very thankful to you for that.
Thank you for having me.
But with that, it's a wrap on this Moneycontrol live stream. Stay tuned to Moneycontrol for all your other news and updates. Thank you for watching.